Hello, everybody. So today I want to talk about Tesla versus Bitcoin because the news today is going to be Bitcoin reached $40,000 and Bitcoin is doing very well. And you may know if you watch my bi-weekly videos now that I do where I share my portfolio, you may know that Bitcoin is number 2 in my portfolio and Tesla is number 1. Tesla is actually more than 30% of my portfolio. Bitcoin is more than 20% of my portfolio. So let's just say that I have a vested interest in both of these interests and I put money where my mouth is. And when I talk about these companies, know that I have a credible commitment to them. I have vested interest in them. It's not something that I cover to make views. I mean, obviously, I'm a tiny channel. I don't do that for views. I do that to tell you that, to me, these assets are the most disruptive, meaningful assets in our era at the beginning of the 21st century. There's been times where I find them equally outstanding and where I find one much more appealing than the other. For example, when Bitcoin was trading down, in late 2022 in the $17,000. That was an absolute steal compared to Tesla. And then fast forward a month and a half later, we had Tesla, who became a wonderful steal at $100. It's all relative, these two. Which of these two is going to be the best asset? But I want to point out right now, and this is where I'm going to get at, because the goal of this video is to answer the question, which do I think is the best right now? And by looking at this chart, you can probably guess what I'm going to say by looking at this chart. You see that Tesla's return right now, Tesla in dark right here, has been 37% a year for the past 8 years and a half. And Bitcoin, GBTC is a proxy for Bitcoin, it's been 60% a year, every year for 8 years and a half. Now, of course, the delta in performance is due to the past 12 months because Tesla, I believe, if you look at the long-term trajectory of the stock, I believe is highly undervalued. I actually happen to believe that Bitcoin is also undervalued. But before I tell you which one I prefer, which you can probably tell, just looking at this chart, knowing that I consider these assets the two best assets I can think of as far as risk-adjusted returns. They are the two best I can think of. You can probably guess which one I'm going to say I prefer and which one I'm focusing more of my buys on, aside from the dollar cost averaging that I do every week. I do a little bit of dollar cost averaging and I buy no matter the price. So anyways, let me just go through the short-term catalysts for both companies. So let me first begin by talking about Tesla. What is Tesla? Tesla is the standard oil of our day. Why do I think Tesla is the standard oil of our day? Because it is the revolutionary company in the space of energy. It revolutionizes energy. Tesla is much more than just a transportation company. It's an AI company. It's an energy company. And these things are very, very intertwined, highly linked, right? AI is highly linked to energy, right? It's all about how much energy it costs to power it. Cars are themselves highly linked to energy. They're the standard oil of our day. Standard Oil was the biggest company in the world back at the turn of the 20th century, largest company in the world, and when they split it up, it was 16 companies. I believe, if you think 20 years out, we may see a Tesla getting split up 20 years out, but we're nowhere near. Anyways, I'm going to do something I rarely do on this channel. I'm going to talk short term because this is answering the question, which one is the best asset right now? Short term. So short term for me is 1 year, right? That's what analysts perhaps consider long-term. Sometimes some people look as short as a quarter, but to me, short-term is 1 year. So what do we have for Tesla in the short term? We have the Cybertruck. Will create a lot of excitement. A lot of people still don't know much about Tesla. Whenever they're going to see one of these vehicles on the car, it will create excitement. Then we have the FSD 12 release, which is rumored to not be released as a beta product. So full self-driving, of course, has been delayed, but one day it will come. one day it will come, and maybe it's going to be this year, maybe it's not. If you're a long-term holder, it doesn't matter too much. Model 3 refresh, Model 3 Island is coming to the USA. That's going to reignite the growth of the Model 3 in the US. That's a big deal. The revenue itself across all of the businesses is predicted to grow 35 to 40%. So, all of the other models like the Y, mostly the Y, right? S and X are not that big. They're going to keep growing at this rate of 35 to 40% revenue, right? Revenue growth. And keep in mind, this revenue number is highly linked to how many FSD take rate we're going to get, right? And if you break FSD, if you succeed with FSD, then a lot of people are going to buy FSD, right? So it's a big part of the business. We have Tesla Energy over 1 year, which is predicted to grow at another 100%, so another doubling. So, analysts will slowly, in my view, begin to notice Tesla Energy, the Tesla mega packs, and begin adding a valuation to the stock. Because right now, you buy Tesla for a transportation business, for the auto business, and you get energy for free, which is very hard to understand given that they have a leading position in the revolution in energy, in the revolution of utilities and what's going to happen to utilities and the end of peaker plants. Remember, I say this all the time in my videos, 1.5 trillion of revenue is electricity sales around the world. It's predicted to grow to 4.5 trillion in revenue by the end of 2030. It's a huge market. Right now, electricity around the world is twice the US grocery market, to give you an example of how big it is. A major market. And we have another catalyst, which is a point of sale tax credit, which is going to be $7,500, which a lot of people, don't have that money right now. They have to wait for a tax refund. You're not going to have to do that at January 1st. Always important to remember that. And lastly, the catalyst that's going to benefit all of the stocks is the interest rate drop, which there seems to be a consensus among the people that matter in the market, not among the people who are just jawboning and who are just bluffing, but among the true analysts, the people who actually analyze that stuff. For example, what's his name? I can't remember his name. Famous hedge fund manager said that recently. Anyways, it's not the only one. If you look at the CME watch tool, we are slowly going towards a March. The March odds keep increasing in the CME watch tool, and so I believe it's going to be March. That would be my pick too. So that's for Tesla, and then Bitcoin. What do we have with Bitcoin? With Bitcoin, we have the hardest asset to ever exist, the hardest form of private property possible to ever exist. As Saylor said famously on CNBC, kind of roasting the CNBC panel, you can literally take it to your grave, right? It's the first time that you can take quote-unquote money to your grave, which means we have to change that quote, because that quote is not true anymore, right? When with gold, you couldn't do that, right? With gold was not stored as free speech in your head, right? Gold, someone could steal from you. Gold, you could have wars, you could have force used to steal it from you. With Bitcoin, if you store it on the main layer, on layer 1, which is what still most people don't understand, right? Most people don't understand that, no, Bitcoin is not a scam. The people who created scams out of Bitcoin were these layer 2, layer 3 platforms, right? Like Celsius or FTX, who scammed their customers. But people never held the Bitcoin. They never owned it in their head, right? They never owned it as a code in your brain, as a string of 12 words that you memorize in your head. Right, you've never owned it like that if you believe that Bitcoin is something that you're just going to have on the Voyager app or the Celsius app or even the Coinbase app or the Cash app, right? It's not your Bitcoin until you put it in your head. And once it's in your head, it's never happened, ever. And it's the hardest property on earth, and it cannot ever be taken from you as long as you give away that code. And it would take the speed at which one needs to make a computer and the number of nuclear plants all at once that you would need to just modify a transaction is something that even the strongest nation could not pull off, because Bitcoin is the money that follows the law of thermodynamics, right? There's no such thing as hacking Bitcoin. There's no such thing as being clever and finding a way to hack it. The only way to do anything with Bitcoin and to process Bitcoin transaction or to change the ledger, the only way is to win this competition for the right to write the block, the next block, and that competition is called mining. And yes, it uses 5% of the energy of the earth to do that. 5% of all our energy goes towards Bitcoin, but that's a feature, not a bug. That's so that you can't have someone who modifies it without expanding that energy. And of course, it's impossible even for nation states to expand all of that energy all at once. And even if they did, all you could do is make a few fake transactions, and 10 minutes later, the ledger would get updated anyways. So anyways, I don't want to get too deep into the theory. What are the catalysts for Bitcoin? Short-term catalysts for Bitcoin. So we have an ETF approval, probably in January. So that means that more money is going to flow into it. And of course, when you have more money flowing into Bitcoin, what happens? Well, the price goes up. Why? Because the supply is fixed at 21 million. Minus whoever lost their Bitcoin, which is a lot of people who lose their Bitcoin. And you also have a new movement in the Bitcoin space, which is people who simply decide to when they pass away, when they die, they simply decide to not give out their keys to anybody and create deflation for everybody on the network. That's another trend that you're seeing developing. So it's like making a donation to humanity by reducing the money supply. It's very powerful stuff, if you ask me. So that's a big deal because new money is going to flow in. And then you have the halving. The halving is coming in April of 2024. The new daily supply gets cut in half in April 2024. We're going to move from 6.25 to 3.125 BTC issued every 10 minutes. And so that means that theoretically, the new supply that's getting sold, and those miners have to sell to finance their operations, to pay that electric bill, they have to sell the Bitcoin, right? That new supply should get halved, reduced in half. That's what's called the halving. And so theoretically, if you assume that most of the supply of BTC actually comes from miners, which it does, I mean, the number of hodlers, as they're called in the Bitcoin world, is through the roof. And so most of the new Bitcoin that is sold, that you buy on exchanges, is Bitcoin that has been recently mined. But that gets cut in half in April. In April, it gets cut in half. So theoretically, that should be a 2x. And what if you have new money? What if you have new money? Well, current Bitcoin market cap is 850 billion. This is eerily similar to Tesla's market cap, isn't it? Isn't it? It's like exactly the same as Tesla's market cap. I find that very interesting. But anyways, let's say you have a dozen ETFs that get approved in January. Financial advisors around the world, around the US, are gonna advise their clients to put 1%, 2%, 5%, whatever into Bitcoin. All of a sudden becomes available in a whole bunch of retirement accounts, etc. And so you have to ask yourself, how much more money is going to come into Bitcoin? So if you were to assume that, say, half of that comes into Bitcoin, right, 525 billion of new money flows into ETFs. If you were to assume that, given that ETFs are hard money and a hard asset, they're going to have to buy them from these miners who are mining twice as little. So you end up in a situation where the ETF would likely make a plus 50% move. So being very conservative, in 1 year, could we see a 2 to 2.5x from where we are right now? I think so. I think that's a very conservative estimate. We could see it overshoot to the upside. We'll see. We'll see how that goes. But keep in mind that, and this is going back to what this channel is called, right? Beat the denominator. Whether you assess the price of Tesla, whether you assess the price of Bitcoin, you need to also look at how many US dollars are out there if you're going to tell me the price of Bitcoin in terms of dollars, right? If you tell me the price of Bitcoin in Bitcoin, i.e. you tell me I have 2 Bitcoins, I know what that means. You have 2 Bitcoins, right? But if you tell me I have $80,000, that's an entirely different question, right? Because you having $80,000 today is not nearly as good as having $80,000 5 years ago. And which this is not nearly as good as having $80,000 50 years ago, right? 50 years ago, you would have been the equivalent of a millionaire of today if you had $50,000. So anyways, Tesla. So Tesla, let's talk about Tesla. And by the way, if I had to pick, what would I choose between the two? Well, I would pick Tesla. I would pick Tesla. This is why I'll finish Tesla. And this is where you'll see, I believe, we have more meaningful catalysts for Tesla coming up than for Bitcoin, despite my love of Bitcoin. So Tesla, at current prices, I would pick Tesla. And it makes sense, otherwise it's Bitcoin who would be my number one position, right, obviously. But no, it's Tesla. So what are the short-term catalysts for Tesla? As discussed, so the Cybertruck's coming. Let's do a simple back of a napkin math. Let's assume to the low end, let's assume the low side, right? The low price, let's assume they have 250,000 units times 80,000, which is negative here, by the way. Assuming 80,000 per unit is negative here because, a lot of people are going to get the 100,000 version of the truck, right? The Cyber Beast, and a lot of the people are also going to add FSD. So that number right there is fallacious because, it should be closer to 90,000, assuming some people buy the Cyber Beast and assuming we have even just a 10% take rate in FSD. And assuming 10% margin, I think that's going to be much higher, but 10% net margin is super conservative. So that would give you what? $2 billion in profits. You apply the current depressed PE, and I weigh my words when I say this is a depressed PE, given where the interest rate environment is headed, and given that we live in a world where the interest rate environment right now is a bluff. It's not sustainable, the current interest rates. PEs are going to go back up. 2020 is going to be the norm again because we kept printing, because the US government has a $2.6 trillion deficit, and we kept printing like the events of 2020 were still happening, right? Even though we're in 2023, we've kept spending. And so the P's of 2022, the P's of 20 and 21 are going to come back. So anyways, but assuming this depressed P, that's 134 billion in extra market cap, that's plus 20%. The Cybertruck alone is plus 20%. What happened to the stock the day of the Cybertruck announcement? Down 3%. Anyways, the market is not rational in my view. FSD, not beta. This is another big deal catalyst that lots of rumors are showing right now. There's pictures right now of employees circulating on Twitter showing FSD 12 without beta next to it. This is an entirely binary outcome. And to quote Elon Musk on the call, if they solve it, if this happens, right? Elon Musk says this is going to be the greatest valuation increase in history, or the greatest valuation reset in history. If this happens, right? Because the take rate is going to be tremendous, right? As he calls it, it's a baby AGI. If this happens, that's the greatest valuation reset that we can imagine. And I really, really believe that. Now, of course, everybody dismisses that claim from him because he's 5 years late on it, but he's late on all of his claims. It's like Elon time is not, is not our time. It's a little longer, right? But does he deliver? Yes, he delivers, but he's just late. So maybe it's not next year, maybe it's the year after. But if you're a long-term investor, which most people are, it should absolutely not matter when it happens. On the contrary, if you're a net buyer of stock, and I believe that most people are net buyers of stocks well into their 60s. If you manage your life well, you're going to be a net buyer of stock well into your 50s, well into your 60s. This is a good thing because you get to buy the stock cheap before that reset. Very important. When that reset happens, when that event happens, I believe it will be of the utmost importance to actually hold Tesla, actually hold the stock. And we see it happen on smaller stocks. You have movements. Sometimes a stock takes 30%, 35% in a single day. What's the stock going to take when this happens? Right? And you'll have a lot of FUD, but FUD is becoming less and less relevant. People are relying less and less on regular media and going more and more on crowdsourced news and their own news that they find on social media. Anyways, that's a tangent here. Moving on. Model 3 Highland comes to the USA. This is going to be good for margin. We know it's a much more profitable vehicle for Tesla to make. Wall Street may give greater price targets, greater appreciation for Tesla because Model 3 Highland is coming to the USA, which is going to be great for margins. And oftentimes, as we saw an anchor on CNBC the other day who said Tesla had not refreshed anything in years. It's as though if it doesn't happen in the USA, it doesn't happen for US analysts. Anyways, which is crazy to me. That's just the way it is. Revenue grows 35 to 40%. So what that means is that if the price to sales ratio remains constant, which it won't, I believe it will go up because interest rates dropping. But if it does, that means theoretically you should get a 35 to 40% return, right, equal to the total return. It should be price to sales should increase in line with revenue growth, with sales growth, right, if the ratio remains the same. And for Tesla, it's been a 7 for a while now, and it's probably going to remain a 7 for a while. Tesla Energy grows another 100%. This is Wall Street starting to value Tesla Energy and putting it into the models. And this is something we're going to see in Tesla multiple times because so many business lines are not included in any other price targets, any other models in the market. So that, I think, is going to happen. Then we have a point of sale tax credit, which should reinvigorate the sales, especially in Q1 of 2024. And I am very optimistic about it. You see, that's a lot of stuff to be optimistic about. And lastly, the interest rate drop. That begins the journey towards going back to normal time price ratios. Price ratios that are more in line with the understanding that the money printer is the only constant and that quantitative easing is going on until infinity and will be going until infinity. QE to infinity will come back, as evidenced by 2023 and the deficit, as evidenced in March of 2023 by the unwillingness of the Fed and the Treasury to go through a deleveraging. In 2023, we had capitalism offering us a beautiful deleveraging. What happened? They did the bank term funding program. They refused the deleveraging. They didn't want to see Silicon Valley Bank go out of business. I mean, sure, some companies would have greatly suffered, like Roku would have likely went out of business. A lot of startups would have went out of business. But that would have been the deleveraging we needed. If we were not in a QE to infinity environment, they would not have done the BTFP program. They would not have done that program in March when the market asked, do you want to go for deleveraging? Because capitalism was working. Capitalism was doing its job. Anyways, enough of that. And the last thing I'll say is valuation. I didn't write it here, but I want to talk about valuation for Tesla. Tesla is cheap right now. In fact, if you look at the price to sales currently compared to the sales, you can see that the price to sales has been declining for about 3 years. We've had a declining price to sales over the past 3 years. Aside from Q1, you may remember the madness of Q1. That was abnormal, what happened in Q1. But aside from Q1, we are at the same price to sell as Q2, right, of last year, 4 quarters ago. So that was Q1 actually. That's Q4 that was really, really bad. They report a year like so. So we're back to a price of Q4 right now as far as our price to sales ratio. The point I'm trying to make is that if the price to sales ratio was more in line with what we had in 2020, a QE to infinity environment, what we will inevitably, in my view, get back to. If that price to sales was in line with that, Tesla should be an $800 company. It should be an $800 stock. And in my view, these prices will get back to this price to sales ratio. And why should it be an $800 stock? Because look, the sales compared to 2020 have steadily increased. This is as pristine, has flatline type growth, as linear up growth as you can get. This is great growth. And the price to sales ratio just keeps going down. Well, over the long term, the stock market is a weighing machine. Over the long term, and I believe we will have a reset. And that's the reason why I prefer Tesla right now. Just by counting them, you can see there's way more catalysts for Tesla than Bitcoin, even if I know we've been waiting for the halving for 4 years in the case of Bitcoin. We've been waiting for 4 years in the case of Bitcoin. But the fact is, if Tesla was trading more in the $700 or $800 range, I might tell you I much prefer Bitcoin, but that is not the case. Tesla is very cheap right now, in my view. So anyways, this was not investment advice, just entertainment. I hope you were entertained. I appreciate your likes. I appreciate your subscribes. Thank you for watching my channel and have a wonderful day.